intellectual property. I think you'll find this very interesting, especially with what Kenobi Martins was saying earlier in the presentation. You'll see how this sort of can tie in with what he was mentioning. So it's LCG Licensing Consulting Group. Rand Berner's going to help us to appreciate how to use IP to fund your business. Rand.
Thank you very much. Thanks, Michael. Good morning, ladies and gentlemen. Chris, thank you. Always enjoy coming to this ICFO presentation. Lots of great companies, especially when it comes to the opportunities and in particular about intellectual property. So today what I'm going to go over and talk about is something that I think many companies may not be aware of, you may not be aware of, but really what I want to do is try to tweak your thinking a little bit in terms of the way that you think about your business and the way you think about your assets and what you can do with it. And so today, what I want to talk about really is the fact that your companies in a lot of ways are becoming more and more IP-centric. If you look at your business, some of the businesses that have been presented today, really the whole core of the business is about intellectual property. And it's building a company around that intellectual property. But that's not often what the real core value and what you can do with it is. It has to do more with how you manage that intellectual property. And so as part of that management, and Jordan mentioned this, is you can do something with your IP because it is an asset. I think that many times you may be overlooking it as an asset and having to manage it as such, much like if you have real estate or plants or equipment. The tangible assets are often thought about in terms of how do we manage it, even how do we value them. But your IP is an asset, and many times when you look at your business and you develop your business plans and your marketing plans, you're focusing on the business side, the operational side, the selling side, but you're really not taking a look at how am I managing the asset side, particularly intellectual property. And then the third area that I'll talk about is really how you can use that asset as an alternative funding tool, which is what it really is today, and it's becoming more and more recognized as such. And so I'll start with just a brief background on myself. I come out of the licensing business, been in it for over 25 years, started at the entertainment studios, Warner Brothers licensing the Batman movie and the cartoons and all the crazy stuff that comes out of there, and then moved on to head up a licensing operation at Saban Entertainment in the heyday Mighty Morphin Power Rangers, and since then have moved on, started my own firm, have worked on brands, technologies, all types of intellectual property. And what I've really come to discover is, coming out of the business of licensing, I think, one always assumes that everybody kind of knows what it's all about, or you think they know about, but I found that oftentimes it's something that really isn't understood. I mean, I think the legal side is understood probably a bit more than the business development and money-making side and management side. So today what I'm going to focus on is the fact that, intellectual property really is money, and it's being recognized that it is an asset that has value, that has big value on it. And what you're finding now is, and you've heard the stories, I guess, every day in the news about patent trolls, these non-producing entities, and what's going on in litigation. But what you see is happening there is all this litigation, what are they fighting over? They're not fighting over plants and equipment, they're not fighting over companies, they're fighting over intellectual property. Patents get a lot of play in this day and age, and you see these huge litigation cases going on back and forth. Microsoft, Apple, Samsung, they're all suing each other. Ultimately, it winds up in a settlement, Jordan. I'm sure you're with a lot of these cases. But we're talking about hundreds of millions of dollars. And so you have to ask yourself, what is driving this? Why all of a sudden are these entities popping up? Why are you seeing more of them coming to play on the market? Why are you seeing more public companies with multi-billion-dollar valuations suddenly on the market with nothing more than a portfolio of intellectual property? And the answer is because they're finally recognizing that intellectual property is more than something that you just file a patent, a trademark, or a copyright for, put on your shelf and say, that's what we want. What they're finding is, wait a minute, this whole game is about intellectual property. It's about controlling those rights and what that intellectual property represents. So what you see is actually that what is now dominating the market are really IP-centric companies, when you think about it. I mean, what is Google? Does Google have lots of plants and equipment? Are they producing lots of different products? I mean, basically, they're just an intellectual property company that's deployed that intellectual property over more intellectual property called the internet, and on and on and on. Everything is about a bundle of intellectual property rights. And now that the market is starting to take notice, they found some interesting findings as they start to look at these businesses, and one is that intellectual property companies attract more financing. As was pointed out George's presentation, yes, they are attracting more financing, but interestingly enough, are also finding that companies that have intellectual property have a tendency to grow faster. And they also are increasing their sales rate, and they're doing so not so much by looking at the operation and sales side, but really focusing on intellectual property as an asset and managing that asset. And that's really what the opportunity that exists for all the companies presenting here, and even you as an investor, when you look at companies, intellectual property is something that you should really be taking a look at. And the question is, how is that asset being managed? Is it going beyond just, we've got it, but we're focused on our sales and distribution? So today I'm going to focus on two sides of what you can do with funding. One is the debt, and one is the equity. Just like a real estate asset can be used to collateralize a loan, the same thing exists with intellectual property. You can use it to collateralize a loan. On the other side of the equation, intellectual property can be used for equity financing. Investors can invest in it, receive the cash flow on it, can be used to secure that investment. We're going to talk about both of those options today. And really, when you look at the financing market for intellectual property, it actually has more variations than this debt and equity, but if you look at that as just kind of the broad picture, you've got royalty securitization, which has to do with licensing. You've got licensing deals, they're throwing off recurring revenue stream, and these recurring revenue streams can be securitized, and that's the form of royalty securitization. They can be packed up and put into a special purpose vehicle in which they can, the investors can be paid back from that royalty stream and guaranteed that payment. You've got IP investment funds that have now evolved, and what they're doing is looking to invest, or in some cases acquire companies with valuable intellectual property, and take that intellectual property and bundle it up, invest in it, take it out to the market, and return to the investors their return on investment through the commercialization of that intellectual property. You have commercial finance companies that are now starting to come into the folds, people like GE Capital. And this has only been in the last decade, and a big reason these companies are starting to come in is because they're seeing some of their largest clients coming to them, these big manufacturing companies, big technology companies that with these huge portfolios saying, we want to use these assets to get financing. So suddenly, in a lot of ways, they've been thrust into this market to say, well, what do we do with these assets? And that's where they realize there is value, but it has to be valued. And so you've got a whole valuation side to this, but they are coming into the market in a big way. Interesting enough, with intellectual property, you can sell part or all of your future cash flow on it. It has value, it has future cash flow, and this is another option that exists out there where this asset, again, put in a special purpose vehicle, can be sold part or all of the future cash flow sold to the investors, and that future cash flow then commercialized typically through licensing as the payback to the investors. And then finally, another form of IP financing is what's called the sale and leaseback. In this case, companies that develop intellectual property have taken it to the point where they are ready to get it in the market, but perhaps they don't have the funding for it, or it's going to require more than they have access to. In this case, they can sell the intellectual property to a company who, and then in turn lease it back, form of a licensing agreement where they get the rights to use that IP to make and sell the products. And in the case of the company that buys the IP, they work out a deal, and oftentimes it's a result of where the company that sold it to them is also going to participate in licensing revenue from other commercialization applications of it, usually in a non-competitive form. And in some cases with sale and leaseback, there's actually an option to buy the intellectual property back at some point once the company grows to a certain level. So when you take a look at these financing options out there, again, I'm trying to share with you this idea of opening up your minds, tweaking your thinking a little bit about intellectual property, and realizing it is an asset and there's a lot that you can do with it. As I said, you've got debt and equity, and on the asset side, it can be used to collateralize a loan. And you've got many, many huge deals that have been done. One of the biggest was a Chinese company, a paper company, $1.3 billion from the China Development Bank against their portfolio patents and trademarks. You've got a $300 million BlackRock stepped into the fold to invest in a company, Jawbone, again on an IP basis, using that IP to secure the equity investment. And these are financing deals are all done with all types of IP. It's not only technology, it's trademarks, copyrights, patents. Probably one of the earliest, or the earliest one that really opened the market's eyes to what you can do with copyrights is what's called the Bowie bonds. David Bowie's music was packed up, and they put together an offering and raised $50 million off the future royalties from the song portfolio. And from there, it's built on out. Movie studios are using it, biotech uses it, medical companies have been using it. So this is really becoming a much more aggressive market. And many funds, as I said, have stepped into it, and banks have stepped into it. And so some of these investment funds, again, they create these pool, in a lot of cases with startups too. This is not only for established business, but they also look at startups, such as many of the companies that are here and companies that are a little more advanced, and if they've got a valuable IP, they pool it, and this is how the investors get their return. And there's many companies that are now stepping into that IP investment fund area, including some traditional banks like Deutsche Bank. On the royalty securitization side, you have a number of companies that are stepping into that. Again, the Bowie bonds was an example of that. Movie companies such as DreamWorks using their copyrights, Formula One using the trademark rights to their licensing revenues to raise money, as well as Guess Jeans putting their brands up to acquire financing, securitizing financing, and getting that and paying that back from the recurring revenue, the future cash flows and the current cash flows of that intellectual property. So when you look at this market, the other thing to take a look at is it's been growing, but one of the challenges has been that often, Wall Street commercial banks many times don't understand intellectual property. And they don't understand what it represents as an asset. So that actually has presented an opportunity that's being filled now, and there's companies that are stepping into that gap, and they're called credit enhancement companies. So what do these companies do? They basically work with these traditional forms of finance companies and even investment funds and say, look, we'll take a look at the assets of this company. We'll take a look at the IP assets. We'll go and we'll evaluate them. And in turn, we'll provide you with a guarantee on the value of that investment. So when you make an investment using these IP assets, in the event that there's a default, we'll guarantee that you'll get your money back against those assets. Basically, they enhance the credit of the company. They enhance the value of that intellectual property. And when you see all of these developments that are occurring, and this is just the beginning stage of the market. I mean, it's only beginning to develop now. It's about 500 million or so in financing that's been done. Nobody really knows the extent of where the size of the IP financing market, because it is so new, but it's happening more and more. And again, a lot of this is occurring because you're having the infrastructure, I guess, if you will, start to be built to allow intellectual property assets to become more transparent and easily more understood, similar to stocks, bonds, equities, private placements, many of the traditional funding tools that are out there. So a big part of the funding, of course, is understanding what is the value of intellectual property. Now, much as Michael had shown you the pieces that go into setting up your business to get equity funding based on the business model, part of that piece is evaluation of the business. What is the business worth? What is the investment going to be worth? Well, the same thing exists for intellectual property, except the valuation is different. The valuation for intellectual property is not the same as the valuation for a business. There's different factors that are taken into account, and there's firms that specialize in IP valuation. There's firms that specialize in technology IP, trademarks, brands, copyrights, whatever it is. They have the formulas and understanding of all the different variables that go into it. And oftentimes, what happens is the valuation of an IP could be significantly different than what the valuation of a company is. And many times you can find that the IP valuation can enhance the value of the company simply because it's not carried on the balance sheet. Many times companies are valued, and it exists today not only for startups, small companies, private companies, but even some of the largest public companies are not carrying the value of their intellectual property assets on the balance sheet. A big reason for that is they haven't valued it. More likely, they're not paying attention to it, or they just are not internally managing it and seeing it in that value. But this is often where you can find tremendous value in a company is those assets, and what is the value of those assets. And based on the valuation, you can open up a whole opportunity from an investment standpoint and a funding standpoint. And that especially holds true for investors looking to get into a company saying, you know, is there a way that we can enhance our return? Is there a way we can reduce our risk? And the answer is yes. You can do that by taking a look at those IP assets and saying, can those be separated from a company and put in a vehicle, and can we get a return on them? The answer is yes, you can do that, and that happens more and more frequently. One of the biggest transactions that's been done today is Sears. Sears packed up their top 3 brands, Die Hard, Kenmore, and what's the third one they've got? Craftsman. And they put them inside a special purpose vehicle, the K, Craftsman, Die Hard, Kenmore, special purpose vehicle, and they turned around and raised $1.8 billion against a bond offering on the fund. And what Sears did is they licensed back all those brands. And now they're paying royalties back to that special purpose fund who distributes those proceeds to the investors. And the investors' investment is secured by these big brands that have been around for 20, 30, 40 years. And by putting in that special purpose vehicle, if anything happens to Sears, those investors are secured with those brands. Now, it's not only brands. You can do the same thing with patents. You can do the same thing with copyrights. The point being is it's a different way to be thinking about how to use your IP assets. And it's available to everybody. So in looking at your intellectual property, again, and thinking about your business and thinking about your intellectual property, it is an asset. It's an asset that has to be managed. But it requires a strategy. Much as Jordan had pointed out about a patent strategy, this is often overlooked. If you're going to set yourself up to use your IP assets, in addition to your business plan and marketing plan, you've got to have an IP strategy. What are you going to do it? How are you going to protect it? How are you going to manage it? How are you going to continue it? How are you going to stave off the competition? Do you have the freedom to operate? What are you going to do about infringers? How are you going to secure future IP? Have you got all of your employees covered on it? Are there any leaks inside your organization that your know-how or trade secrets can walk out the door? You read about that every day. Some of the biggest lawsuits today are trade secrets that walk right out the door. And it happens all the way up the chain. Some of the largest corporations in the world suddenly find that their trade secrets are taken, and these are multi-billion dollar lawsuits in some cases. Again, this all goes back to your IP strategy. What are your external and internal resources, plan of action? What are you doing to protect it and manage it, build it, grow it, and expand it? And again, you need that part of your plan. If you have that part of your plan, it's mixed into your business plan, and it's part of what you need to be able to use your IP asset as a financing tool. And then, of course, you can decide whether you want to use it as debt or equity, depending on what you're doing with it, whether you've got licensing opportunities to generate royalty revenues. These are the different options for you. And then finally, what you need to do is you need to do 2 things. One is an audit. You may have intellectual property, but you probably don't know the extent of all the intellectual property you have. It's more than patent, trademark, or copyrights. Know-how, your website, your copyrights, your trade secrets, your formulations, the way you do business, the way you sell, the way you distribute. There's more intellectual property in your company than you probably realize you have. So what you need is an audit, an inventory of it. And then the second piece you need is a valuation. How much is all that intellectual property worth? And that's something that you need to do through a third-party valuation. You package it all together, and now you have an opportunity to go out and use your IP asset to fund your business. So I thank you very much, and I'll take some questions now.
Brad, let's say you have a company, okay, that's ready to expand into another country, yeah? Would take a look at something like that also?
Sure. I mean, the beauty of intellectual property is it's global. You can use this funding, IP funding, just about anywhere where, well, you've got to have secure IP laws, and they've got to respect that.
Which is true, but
yeah.
you know, sometimes the outside markets, you know, outside the United States, are more lucrative. Yeah?
Sure.
They're
Oh, yeah,
faster than they are in
absolutely.
the U.S. because just the sheer size of it. I'm talking about Mexico.
Sure.
Especially.
Yeah, absolutely.
We got to talk.
Okay.
We got to talk. Okay.
Anything else?
How does that affect the company if they got this separate special purpose vehicle with their IP, and it's a company that's looking at, you know, eventually being acquired, or
Well,
does it devalue?
it doesn't really devalue, it actually enhances the company, because what you're doing is you're taking the IP assets and setting them up for their own vehicle and insulating them, for example, against litigation or bankruptcy, and it actually protects those IP assets so that they're still part of the company. It's not separated from the company, but it's insulated. That's more a Jordan question for the legal structure of how it works, but it doesn't necessarily diminish from the company, but actually helps to insulate those assets.
Ryan, do you charge a flat fee for this, or is this participation that the funding will require?
It just depends on the
And the deal?
situation, and I'm working with, and by the way, this is a program that I'm working with Chris and ICFO on as one of the options and opportunities for companies here as they go through the evaluation, are IP assets and funding alternatives available for them, and if so, then we can take a look at that program.
Rand, great presentation,
Thank
easy to read.
Thank you.
And I'm glad you're here because what you're talking about is a real value.
Thank you.
Definitely.
Several years ago, we acquired a company strictly for their IPs.
There you go. Perfect example.
And their IPs were worth more than the enterprise value. And yet, the seller only looked at enterprise value, and we traded on that concept. The IPs were worth more than the enterprise.
That's a great, and that is not an uncommon story. Oftentimes, again, if you overlook that asset, you found a hidden gem. And
He didn't know the value,
Yep.
but we did the audit, the IP audit in the vault, and we had an expert such as yourself look at it, and he completely misread the tea leaves. So your service is incredible,
Thank you.
just
Great
incredible.
Thank you. All right, thank you. Thank you very much.
Thank you, thank you. Excellent. Well, we've now come down to the final company of our conference. And, two? Oh, I'm sorry, you know why, this is, hang on one second.
And I mean,
Okay, I'm glad you said that because I'm looking at the order here, it's a little off. Thank you again, Rand. We always enjoy listening to you. Like I mentioned earlier to Jordan, each time I hear your presentation, I learn something more. And I couldn't agree more with Michael. It is truly a value-added proposition, without a doubt. So thank you for that. Let's now give our attention to